Hey traders, welcome to this week's Forex Focus. I hope you are all doing well. What we're going to do in this show is the same as what we always do, and that's look at the major currency pairs and look at the opportunities they're setting up for the week ahead. We'll look at the major technical levels where we think the markets could potentially react. But remember, what I highlight and what I talk about in the Forex Focus, it's not trading advice. It's not telling you to go and take those trades. You just basically take a look at them. You look at what I'm looking to do with my own account, and then you see if it fits in with your trading style, with your risk profile, and indeed with what you want to do with your own trading account. Okay, so with that being said, let's start off by taking a look at the Aussie dollar. So the Australian dollar here has been playing with the same level for a couple of weeks now, and that is this previous level of resistance over here that you can see at around the 0.6407. But actually, if we look back left a little bit, we can see that it's more or less pit perfect, reacting with the previous level of support at 0.6438. So remember, when you're trading currency pairs, you're not looking to trade it pit perfect, you're trading within a zone. So therefore, anywhere from the highs or around the highs of these candles over here towards the lows of the candles in the recent past is where you'd be looking to take your trading opportunities. And there are a few ways that you can do that. Obviously, you can just take an immediate bounce from the level, which is primarily the way that I trade the markets. I identify high probability trading opportunities and trading zones, and then I initiate trades from them. I don't look for confirmation for the majority of the time, because I feel that once you've waited for the confirmation, a lot of the move is already gone. Whereas if you get good at identifying these levels, then really you can get in there and get out very, very quickly. And you don't need much of a move in order to be able to take your profits. But of course, you guys and girls need to decide what the best approach for you is. Because when you aren't waiting for confirmation, then you do get into some opportunities where the market doesn't really go at all, and it just kind of smashes through the level, which is the benefit of trading with confirmation. So decide what's best for you. As I said, for the most part, I trade without confirmation, so I'll be using a 2 ATR at or around the level. So if you were, for example, to look at this opportunity here, when the market approaches this level, what you would do is you'd put a sell order in, okay, at this area, so around 0.6439. And then you would look at the ATR down here, which is at 0.0038, so it's 40 pips. I use a 2 ATR stop, so that gives you 80 pips to the upside, which is where our stop loss would be. So if you put just anywhere in this area here, you measure up, so that's about 80 pips. So that's where you would be stopped out if the market were to go against you. But the great thing to do with this is on the downside, so because we're selling here, I'm saying on the downside. So as the market sells off, you can pretty much get out very, very close to the level. You don't have to wait for a big move all the way down towards the lows in order for you to be able to take profits, which is what you can get sometimes when you're waiting for those price patterns, those 1, 2, 3 reversals. Oftentimes when you're doing that, then you get in much later, which means your stop is much bigger, which then means your target is much further away. Whereas the way that I trade, we can get in and out very, very close to the level, which is obviously beneficial. So this is the area that we're looking to trade from the moment. If you missed the opportunities that we talked about last week, where you pretty much would have been able to take profit on that, then now you would really need to wait for the confirmation. So for the confirmed break below this support level over here at 0.6348. So once the market closes below there, that will be your signal to get in there and start shorting the markets. If we take a look at the euro dollar, so the euro dollar here, I'm looking at a previous level of resistance, which you can see here on the daily chart. So back in September of 2024, the market came up and hit the resistance level of 1.1208. It then sold away from that. It broke through that recently, and now I'm looking at that resistance area to start providing support. So when the market gets back to that area, that's where I'm going to become a buyer from. Again, in terms of the entry that you're going to want to use, you could use an immediate buy from that level, as I just described for you, or you can wait for, a candlestick pattern or your favorite price pattern. But ultimately, that's the area there where I want to be looking to buy the market. The pound dollar is similar but different to the euro dollar in that we do have a level. In fact, we've got two levels below the pound dollar that we can potentially take buys from. The first one is 1.3197, which we can see if we take a look here. Is this immediate resistance area over here that the market printed on the 3rd of April. Now, if the market gets below there, and it breaks below, then if we look to the left, we've also got the resistance area on the 17th and 18th of July of last year, which was a very, very strong level because the market traded up to it, and you can see the reaction to that level. It's a very, very clean reaction to the level, and every time the market has gone back there since, there's always been some sort of an interaction from there. So if the market gets below this level, then my preference is actually for it to wait to break below that level, then look to become a buyer and start buying the market when the market gets back to 1.3048. Now, the reason that the pound dollar is a little bit different is, unlike the euro, we are also trading directly into a resistance area, which is why my preferred approach wouldn't necessarily be just a buy from here, although you could do, it's an aggressive buy. There would be absolutely nothing wrong with that. What I would do with this buy is I would use a 4-hour stop loss. So look for the ATR on the 4-hour, which gives you 44 pips there. So 2 times your ATR, you're looking at around 90 pips for your stop loss. So if you got in at this level here, you want to see where's 90 pips, it's just down there. And then on the upside, you'd be able to get out before you got to that resistance level. However, if you used a stop loss based on the daily chart, then you would see that actually it's a 100 pip ATR, which would be 200 pips if you times it by 2, which essentially would make your stop loss 200 pips, and then your profit target 200 pips as well, if you're going for a 1-to-1, which takes you dangerously close to these resistance areas over here. Which is why I say, we want to take the immediate bounces for one, because if you waited for confirmation here, you definitely trade up into it. And then you need to look at the right chart to be able to take that trade, which for me here would be the 4-hour, unless you're waiting for a more conservative entry for the market to come down towards the 1.3044, in which case you could then look to take your trade from the 4-hour or the daily chart. Moving on to the New Zealand dollar. So the New Zealand dollar here, we were initially, a couple of weeks ago, we were looking to sell from this resistance area over here, and the market has just absolutely blasted through that level. So if you did get in on that short, that would have cost you money because the market went on to hit the stop loss very, very quickly. Now looking at this, we're looking at it from a very different lens because we can see that all structure has been broken. So the market has broken to the upside. It's printed a new high over there. We don't have a higher low, but I think it's safe to say that we will at some point. And more crucially, we are trading above some very, very key areas. So this was a key area of support on the 22nd of April last year. Again, on the 30th of July, it was then resistance on the 19th of March this year. And then again on the 3rd of April before the market eventually got through it. So it's reasonable to expect, even if the market were to sell off again, and kind of continue on its downwards momentum, its downwards trajectory, if we trade this from the 4-hour chart, we've got a 30 pip ATR, so you've got a 60 pip stop loss, 60 pip profit target. So it's reasonable to say that you would get a 60 pip reaction to this level, which basically just brings you to this area over here. You can see that you don't get anywhere near the highs, but I think looking at this price action here, it's not to say that it couldn't happen, but I wouldn't expect this sort of a price action right there. I'd expect if it were to sell off, you'd at least get something like that, in which case you'd have the opportunity to take your profits there. And even if it were to break below there, then once the market's trading below this level, then you've kind of got confirmation that you want to be looking for shorting opportunities. But at the moment, it's a buy from that area when the market gets back to it. Okay. Moving on to the dollar CAD. So the dollar CAD is a bit of a difficult one, obviously, with what's going on in the US at the moment. Sentiment towards the US dollar is very, very, very negative. Okay, but then by the same token, the sentiment to the Canadian dollar isn't extremely positive. So I'm not expecting a big sort of reaction over here. The question is can there be enough positivity towards the US dollar to cause a bit of a break up here? if we do get a break up, then I'll be looking roughly towards this sort of a resistance area over here to start selling. Okay, selling the market. So as the market gets up towards 1.4150, I'm a seller. But, you know, in the interim, is it reasonable to expect a break to the upside, some momentum to the upside? Well, what I would say is we can wait for a little bit of confirmation. So once we get a close above this candle over here, so this candle, which is at 1.3910 or in and around there, we can then look to get in on a trade. I would still use a 2 ATR on the 4-hour chart there, which gives you about an 80 pip stop loss and an 80 pip target, which if we measure, we want to make sure that, let's say from here we get in there, we can get out before we get to that resistance area. And as you can see, there's a lot of room there. We get out of that even before we get to the interim level of support, previous support, which could become resistance. So there's plenty of room there for us to be able to take profits on our trade, which is very, very important. It's something that most retail traders, they don't consider it. They don't look at it. And they don't think about it. But it makes a huge difference. You don't want to be taking trades into trouble areas. You want to be in and out as quickly as humanly possible. Okay, looking at the dollar franc. So the dollar franc here is rallying up. So the US dollar has had some positivity here. And remember, we've been talking for a while that the franc and the yen, are going to be those currency pairs where it's going to be the risk on, risk off dynamic. And apparently there was a little bit of positivity last week, which is why you saw the Swiss franc get sold into most. But I don't think that this is going to completely change the tide here. I don't think that we're out of the woods. So I think ultimately, as the market gets up towards the 0.8397 or 0.84 level, that's really an opportunity to sell the markets. I wouldn't be looking to buy right now. I think that, yes, the markets may recover, but looking at this price action here, this is a great setup. This is one that you want to sell into every single time. And I know it can be scary when the market's going against you, to sell into a move. But when you look at the context of the rest of the market, you look at all of this downwards momentum, it does make sense to do that. So I'm looking for a sell from 0.8400, and I'll be taking an immediate sell there. And I'll be taking the ATR off of the 4-hour chart, which, as you can see here, is a 46 pip stop loss. You're looking at around 92 when you allow for spread, sort of 95. So call it 100 pip stop and a 100 pip target there. Finally, if we take a look at the dollar yen, I'm looking for the market to react to the resistance area at 146.36. So as you can see here, probably better from the daily chart. The market has been moving downwards. There's a lot of momentum there. I'll be looking, you can see that we've got a support level. Previous support becomes resistance is one of my most favorite setups in the world because it just works again and again and again. It's just like this self-fulfilling prophecy. And this is an extremely clean chart at the moment. So from that perspective, you would expect some sort of reaction there. And remember, we're not looking for a big reaction at those levels, okay? 2 ATR, so the ATR here is 71 pips. You'll be looking for 140 pips to the upside, which is roughly there. So you can see that you've got plenty of room for the market to kind of wiggle around this level. But then on the downside, it doesn't have to go very far at all in order for you to be able to take your profits. And that, like I said, and I say all of the time, that is the beauty of the way that I approach the markets. Now, if you have any questions, please feel free to post it beneath the video. Otherwise, I hope this has been useful to you. If you haven't subscribed, make sure that you subscribe to the channel so that you get all of the updates. Otherwise, thank you very much for watching, and I look forward to speaking to you in the very next video. Take care now.